Hi there, Jim Small here. I want to talk to you a little bit today about investments. You might think of investments as buying stocks or bonds and possibly real estate. And undoubtedly there are millions of different types of investments. You can invest in commodities such as coffee and oil and gas. There's all types of investments out there. But let's talk about how those investments are applicable to you. It's very easy in general to invest in the stock market. Nowadays you can get an account online and begin trading stocks and bonds right away. Historically, the average return of the stock market may be 6 to 9% depending on who you ask. That's of course without the fees that are charged to the investment brokerages, and that's before taxes. So an after-tax historical return on the stock market is probably in the 6 to 7% range depending on your tax situation. Bonds obviously are less risky overall, and so they have a lower average return or yield. So you might be at 4 or 5% on bonds. Now let's take another investment such as land, or that would be a good one to take. So land, you can invest in land, which is a speculative investment. You might say, I'm going to buy this parcel of land and someday in the future someone's going to use this for a large shopping center and they're going to pay me handsomely to sell them this land. And that might very well happen. You don't know if it would be 5 years down the road or 50 years or 100 years, or they might decide to buy a different piece of land and never build on yours at all. So it could become a worthless piece of land almost. So the speculation in some investments is quite high, and in theory the return, if they happen in the case of land speculation here, would also be quite high. So let's take something more in the middle of the road. When you have a low return of stocks and bonds and high taxes versus a highly speculative land investment. Something in the middle where you'll have more stability and income with higher returns would be investment grade real estate. Now typically when I talk about real estate and investing, I'm talking about commercial real estate. So that means things like small shopping centers or apartment complexes where people live. Things where you're getting rental income every single month that the net proceeds are going to pay you as the investor. So let's take, for example, the apartments we invest in at SANTÉ International. Lots of research. We go out and we look at web listings and we talk to brokers and we look for owners of property that might be willing to sell, and we find properties that are interesting to us, meaning there's some upside, so we can either increase the rents or we can reposition the property so that it can yield more cash flow. So for example, if we could take a property that rents long-term rentals for $500 a month and turn them into shorter-term furnished rentals at $800 a month, that might be worth the investment for us to upgrade to a furnished property. So that's just one example. Similarly, in a retail center, we might buy a retail center and know that we can upgrade the quality of the tenants. These are the businesses that operate out of that center. And this can be done typically by improving the center's visibility with signage and advertising and promotion, painting and repositioning the look and feel of the property. Everything from the curbing to the trash cans to the signage can be changed to upgrade a property. So those properties, in our example, like the apartments and the retail centers, provide consistent and increasing income for the investor group. And that's a lot of what people typically look for when they're looking for higher income. You see, there's more work to do in real estate. So for example, if you're going to paint the property and add new signage and advertise it and promote it, that's clearly more work than just going on the internet and buying stocks or bonds. And so in exchange for that work, there's typically a higher return on your investment. That's what we look for. And yet, it's not speculative like bare land that may or may not someday, way in the future, turn into actual cash again. So that consistent income property from commercial real estate is a great asset class that you should have in your portfolio. And depending on how much you know or like real estate, you could fluctuate up or down in how much of your investments are in commercial real estate. Hope that helps you learn a little bit more. I'll be back shortly for more tips from our website and webinars. Bye for now.